Wall Street's main indexes ended mixed on Thursday, with the S&P 500 ending shy of its previous record closing high. The Dow ended up 0.1%, the S&P was up 0.04%, and the Nasdaq closed a hair lower. All three indexes remain on track for monthly, quarterly, and annual gains. Data released early in the day, including jobless claims, pending home sales, and inventories, all painted a picture of a softening but resilient economy. This scenario has helped cement bets that the U.S. Federal Reserve might cut its policy rate sooner than expected and could avoid a recession. Jimmy Lee, CEO at Wealth Consulting Group, thinks that the expected rate cuts in 2024 will help pull off a soft landing for the economy.
I think that the economy is going to end up being okay. I'm not going to give the credit to the Fed. I think that they should have raised rates sooner and probably bigger earlier on. But I hope that they're done and that we get a rate cut sometime in the spring. Who knows if that'll happen? But I think the Fed does need to lower rates so that we do avoid a recession. And so, again, not necessarily because of how good they've been with the rate increases and the movements, in the last 2 years. But I think the economy itself is working itself out. A lot of the inflation problems that we had were due to COVID and the supply shortages that we were experiencing across different industries that we still have in some areas. But I think it's working itself out. And the consumer, again, here in the United States especially, is proving to be resilient and strong. And hopefully the Fed will lower rates and loosen up the economy a little bit so that we don't have a worse of a landing than we need to, which, again, I think that they're going to get what they want, which is this kind of Goldilocks soft landing scenario.
Stocks on the move include Boeing, which dipped 0.7% after the plane maker urged airlines to inspect newer 737 MAX airplanes for a possible loose bolt in the rudder control system. And U.S. listed shares of Chinese companies, including Alibaba and JD.com, advanced 1.5% and 2.7% respectively, as China's blue chip stocks staged their biggest jump in 5 months.